Hi, so Charlie, giving you Monday's market commentary. I hope you're very well. Don't adjust your set. I've just got the chart up on a blank one at the moment because I just want to look at effort versus reward or productivity levels really to start off with, because trading is quite unique in that way, in that you don't need to be putting in bags and bags of effort in order to be able to get the reward that you may desire. So, for example, if you're, but in the working world, then it's the opposite way around. Because let's say you're, for argument's sake, a cleaner. So, if you're a cleaner, and if you have an 8-hour day, but you decide to work an extra 2 hours, then you're going to get more cleaning done if you decide to do those extra 2 hours, and probably get paid overtime on the back of that. Alternatively, you may be an MD, you may be a company director, and if you're putting the extra hours in, then it could equal more profitability for the business, because it means that you can get more work done, which means that it filters through to the company, and more profitability as a result. So generally, when it comes to work, and same with sales, someone who's in sales, the more effort you put in equals greater commission, or whatever you want to call it. So generally in the working world, the more effort, the more time we put in, then the more profit, or the more that we benefit as a result. However, when it comes to trading, it's not quite the same. Now, don't get me wrong, you need to put effort in as regards to learning, and so oops, wrong pen. So you need to put in the learning, and you need to understand the markets and understand everything there is technically about the markets that you need to know. So you still have to put all the effort in order to do that. But on a day-to-day basis, if you are a trader, then working for 12 hours doesn't necessarily mean that you're going to be more profitable than working for 1 hour. It just depends on what the market's doing in any one particular day. So, for example, you could be sat in front of your screens for 12 hours, but it could just be that there's very little going on, and therefore at the end of that you get nothing, because maybe there's not a single trade set up over that whole time. And yet on another day you may only sit in front of the screens for an hour and you make yourself £200. So it's very, very different, and that's psychologically that can be quite tough for people, because the mentality, and we're drilled this from being a child, really. The more effort you put in, the harder you work, then the more you'll gain, either with exam results all the way through to the working environment. So it's very different, and so effort doesn't always necessarily equal results. And a lot of traders sometimes get that wrong, because they think, well, if I sit in the front of my screens for 12 hours a day, then I'll be better. Well, yeah, you may learn, so you can use it as a learning opportunity to be sat in front of your screens to do that, but you won't necessarily, not always, make more money by being in front of your screens more. In fact, it could end up that where you trade more because you are sat in front of the screens, through boredom, you end up over trading and end up potentially losing on more trades. So it really depends. So this whole effort versus reward thing is they're entirely uncorrelated, really, when it comes to trading, because it doesn't really make any difference. And you can, if you're a swing trader, you could literally put in check the markets in 5 minutes, put on a trade, and you could have a nice reward over the coming week or so on the back of that. So it really is very different. So I just thought I'd go through that today with you regarding effort and reward. Anyway, let's go and have a look at the market, shall we, on the daily charts. Oh, before I go any further, yeah, I was in that Euro trade on Friday's update, and I got back. Kim and I had been out in a meeting, like I said, and so if we recall, this is the hourly chart of the Euro. If I recall, when I left, markets were down here, and I was looking at a move back up into the 85 to 90 zone. I think I was looking at potential trade, and obviously I'd been gone for hours and hours, and I got back. And I cancelled my 85 trade, 130.85, because I thought, before I'd left in the end, because I thought, well, I might as well just leave it there at the 130.90 and those orders. Anyway, so I came back, and by the time I came back, we had, where was it? I'm trying to think whereabouts it was. It was probably during this bar, but we'd been up, triggered me in, and price had come back down a bit, and we were sitting at 130. I think it was 92. If I can probably take it back on a on a 5-minute chart actually, and we'll be able to see what actually happened. It was at 130.92 at the time. I think it'd been up and it'd come back down. So it triggered me in about 90. That's it. I think I came in around about here. It'd come back down here when I walked into my office back in the afternoon. And so I thought, oh, I'll just put my stop back up above this high, and it was about 92. I think my stop was, so I had a 2-pip loss on that trade. And because by the time I'd come back, I'd just seen the price action. And this is another thing that sometimes you have to make a decision. You don't necessarily have to stay in a trade just because you've got into it. And I took a decision that the price action, the momentum had started to switch, so I wasn't interested in that level anymore. Earlier on in the day, if it had come straight up, then it was more likely it would have come straight back down. But it took so long to get up there that it allowed the momentum to switch, and so therefore I had to then take that caution. So anyway, that was that. So nothing there on Friday. Anyway, back to the daily charts. So at the moment we're just having a little bit of a pullback here on the daily charts on the euro. I think I might have alluded to the fact that I was looking for the markets to weaken off coming into this week. I thought they had the potential for one fresh new high, but as yet that's not the case. But we'll see what happens today. There's not a lot going on just yet today. So overall, what am I seeing? Not really seeing a lot just yet. I need a little bit more confirmation either way. So coming back down to the hourly charts, I'd like to see us break Friday's lows, and if we were to come lower, that'd give us a bit more confirmation. At the moment, this is an hourly chart. We're sort of trading within this range from Thursday and Friday. So again, Friday's lows or Friday's highs really, and or certainly the overnight highs from last night. That would even do it. So. Oh, sorry, no, that was Friday night. I think it was actually. Sorry, yeah. Yeah, we've got a zone here from 131.30, let's call it. So up there and down here at 130.40. So, so at the moment we just don't know either way. So we shall see about that one, and that's the way that I'm sort of looking at it. And it's a sort of similar situation with the pound. Pound's backed off slightly this morning, just on the China news, but GDP news. But coming back down to an hourly chart of it, it's not really saying too much just yet. We'll have to. I'm just playing a wait and see game really. So let's take that back. So not really too much I can say about that, but certainly I'd quite like to see these markets roll over a little bit. But at the moment they've got the 4-hourly 50 MAs in place, and that could act as support. They've had a good run, a nice little pullback, but a pullback a little bit further to their 4-hour 50s, and that could act as support anyway. So at the moment, when you look at the daily charts here, put it in perspective, we've gone 1, 2, 3, 4, 5, 6, 7 days where the pound hasn't really done too much in the last 7 days. But overall, from the lows, it's had a great run. It's just a case of, okay, where are we going to go to from here? I think if we can get back up to that 154 level, then again, back to the hourly charts, then we come back up to that zone again, then it could mean we get another breakout, which would then signify that, okay, we've still got yet more yet to go on that. And remember those fibs, we've still got 50% retracement potential on the cable as well, so that's still quite a bit higher. So but let's go and have a look at the stock market indices, because we've got the S&Ps broke to all-time new highs last week. I've been predicting it for months and months and months, and it's finally happened. So where do they go to from here? Well, we're still in this lovely trend channel, and at some point it's going to want to pull back, but the trend remains up until it starts to roll over. So I'm not really too fussed about what it does. It's at new all-time highs, and I suspect overall I'd like those all-time highs to get properly breached, and to get a good leg beyond that. But of course we have just hit those all-time highs, and we could back off from here potentially. But I still think that overall we'll probably breach those and go higher again. It may be, if we were to pull back here over the coming week or two, and it started to become a meaningful pullback, then fine. And I think the way that I would look at it then is that we would come back up in the last quarter of the year to probably break to new highs and take that final leg higher. So any pullbacks that we do get, if we were to put a correction in at some point, we are approaching the seasonally weaker time of the year as we hit end of April, early May, and through the summer. If we were to correct during the summer months, then I would still be looking for higher prices going into the end of the year. And let's have a look at gold, because gold's obviously attracted the attention last week with this big move down. It's come down again this morning. It's down at 1440. It's just hit its weekly 200 moving average, gold. and it's got its monthly 50 period moving average down at 1400, so it's only another $40 lower. And if we come to the monthly chart now, there you go, so there's the monthly 50. Now that hasn't been hit, as you can see, since back in the early 2000s. So that's looking like a dead cert at some point on that monthly. I mean, it could do that in a day, the way it's moving at the moment. It's big price movements. So we'll have to see. But certainly at the moment, gold's weak, and all those people who have been just blindly bullish, in my view, on gold over the last year or so, then I think it's going to come back to just to hit them a little bit, because you have to put into context. Over a year or so ago, I was talking about this big candle here, and that ultimately we would see a correction off of that, and that's coming through. We've seen weakness ever since. It's never managed to break to new highs, and it's not been sustained. But overall, it's obviously still in a monthly bull market, a multi-year bull market. It's just in a correction phase. But for now, we are at support currently. This is the daily chart. We're at the weekly 200. So we, as I said, the futures are actually live at the moment. So down at 1440 currently. So dropped again today. This isn't a live chart of gold. And so we're either going to bounce from here on the weekly 200, or we could push down to that monthly 50 and bounce from there. So we're in the zone for a bounce. We're there or thereabouts. Not at 1500 because this isn't live, like I said, but at 1440 or 1400, we're round about the zone for a bounce. But this is very volatile. It could overshoot and then come back up. But certainly it's nearing a support zone, or is at a support zone currently. Okay, that's me done. I'll leave you to it. Have a fabulous couple of days. Kim will hopefully be back on Wednesday.